Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Genfleet Therapeutics, Shanghai, Inc. annual report. Genfleet Therapeutics, Shanghai, Inc. offers a range of businesses and services focused on developing novel treatment options for various diseases. At the core of their operations are biopharmaceutical products designed to combat multiple solid tumors, autoimmune, and inflammatory diseases. Their product portfolio includes GFH925, a treatment option for advanced non-small cell lung cancer, and GFH375, an orally bioavailable small molecule inhibitor targeting Kirsten rat sarcoma, KRAS, G12C. These innovative treatments demonstrate the company's commitment to advancing oncology research and providing effective solutions for patients suffering from complex diseases. By concentrating on developing novel treatment options, Genfleet Therapeutics is positioning itself as a key player in the biopharmaceutical industry, particularly in the fields of oncology and autoimmune/inflammatory diseases. Genfleet Therapeutics, Shanghai, Inc. market capitalization of $12 billion is significantly larger than the average industry peer of roughly $0 billion. This shows that Genfleet Therapeutics, Shanghai, Inc. holds a significant advantage in their industry. Genfleet Therapeutics, Shanghai, Inc. trades at a higher price-to-book ratio of 8.98 times relative within the industry. While the stock does not screen as absolutely cheap, mixed valuation signals relative to industry peers prevent a definitive conclusion. With the broader industry trading at lower valuation levels, this may reflect transitional pricing dynamics rather than clear mispricing, warranting further analysis of earnings quality, growth sustainability, and balance sheet strength. The company exhibits a very high leverage profile, with liabilities accounting for 422% of total assets. This elevated debt level warrants heightened caution, as it may limit the company's financial flexibility and increase risk during economic stress. We have to further examine the industry and the nature of the business to determine if they justify the current valuation. Liabilities have grown faster than assets and equity, which is somewhat concerning. However, asset growth remains positive, suggesting management may be temporarily leveraging liabilities to fund expansion. Shareholder equity has weakened over the past 5 years, accompanied by declining or negative operating income. This suggests the business may be eroding shareholder value and warrants caution. The share count has remained broadly unchanged, indicating no significant dilution or buyback activity over the past 5 years. The income statement shows that the company have been growing its revenue annually, but the operating income have not been increasing. This shows that the business is under pressure with rising cost. The primary drivers of revenue growth for a company can be attributed to several key factors. Firstly, the establishment of multiple domestic and global out-licensing partnerships has significantly contributed to revenue growth, page 3. The launch of the first product, Fulzorazib, in China has also been a major driver of revenue expansion, page 3. Furthermore, the inclusion of the company's product into China's National Reimbursement Drug List, NRDL, has provided a significant boost to revenue, page 3. The market potential of the RAS sector is expanding steadily, with growing demand for KRAS inhibitors projected to surge tenfold by 2034, page 16. The increasing patient population with KRAS G12D mutations, exceeding 660,000 by 2032, has also contributed to revenue growth, page 16. Additionally, the pancreatic cancer treatment market size is substantial, valued at $100 billion, and is expected to experience a 13.6% compound annual growth rate, CAGR, over the next decade, page 17. The company's collaboration with Verastem regarding GFH375 has also been a significant driver of revenue growth, page 18. Furthermore, an increase in bank interest income has partially offset other factors contributing to revenue growth, page 18. Overall, these factors have collectively contributed to a 24.7% increase in revenue from RMB 104,703 to RMB 130,267, page 23. The company's debt level has undergone a significant transformation over the past year. Initially, the debt stood at RMB 51,128 in 2024. However, this figure saw a substantial increase to RMB 83,901 by 2025. This notable rise is largely attributed to the introduction of interest-bearing bank borrowings, which were non-existent in 2024, but reached RMB 83,901 by 2025. The impact of this increased debt level is also reflected in the company's interest expenses. With a significant amount of debt now bearing interest, the company can expect to incur higher costs associated with servicing these loans. This development underscores the need for the company to carefully manage its finances and explore strategies to mitigate the effects of rising interest expenses on its bottom line. Management is expressing optimism about the company's future prospects due to promising results from GFH375, which has shown efficacy in treating multiple tumor types. This positive sentiment is expected to translate into increased cash flow through various initiatives. The company plans to generate more revenue by launching and commercializing GFH925, forging partnerships with third parties, expanding its product pipeline, and improving operational efficiency. In terms of strategy, management's focus is on individual products rather than a comprehensive company-wide approach. However, the overall goal appears to be one of growth through diversification and expansion of its product offerings. By advancing the development and commercialization of GFH925 and other pipeline products, the company aims to increase revenue and improve its financial performance. There is no notable activity in terms of acquisitions or divestitures. The company has not made any significant purchases or sales of assets, businesses, or subsidiaries that would impact its overall operations and financials. This lack of activity suggests a stable and focused approach to business management, with the company choosing to maintain its current structure and resources. Based on the extracted summary, it is clear that the company has not paid any dividends in recent years. The information provided from page 30 and 35 of the report confirms this statement. The company's decision to withhold dividend payments suggests that they are prioritizing other financial goals or strategies over distributing profits to shareholders. This could be due to various reasons, such as investing in growth initiatives, paying off debt, or conserving cash for future needs. In summary, the company has chosen not to pay dividends, instead opting to allocate its resources towards other objectives. That concludes the financial summary for Genfleet Therapeutics, Shanghai, Inc. Feel free to comment below, and I will be happy to answer them when possible.